Good morning, everyone, and welcome to today's session with TreasuryONE and Tax Consulting South Africa called the New SARS Process for International Transfers, which will be presented by Joshua Beju. I hope everyone could hear the music that was playing there. I don't know if there might have been a technical difficulty, but it was a well-known song called Follow the Money, and you'll see it ties into the overall theme of our presentation this morning. But I'd love to just in the chat, if everyone can just greet us and let us know where you're joining from. I'm joining from a cold and wet George this morning, and my name is Dr. Dylan Price, and I'll handle today's introduction and facilitation. My colleague Roxana Naidu will take over from me towards the back end of today's session. My sincere apologies, I have another webinar with the South African Institute of Taxation at 11 o'clock on the SARS voluntary disclosure program and how you can fix skeletons in the closet. But I wouldn't miss this webinar at all. It's such an extremely important topic. And I just want to thank Dylan, Alette, Maria, and the team at TreasuryONE for approaching us to speak on this topic. I know it's quite a complex process from what we've seen in our sessions with various other SARS RCBs. The process has become more significantly difficult. And given the risk of criminal sanction, everybody is trying to make sure that they approach this process cautiously, risk-averse, and to ensure that the application gets over the line. So this morning is pretty much an exclusive session for TreasuryONE, their partners and their clients, and we're very humbled and privileged to be invited by TreasuryONE to handle this session this morning. And as I mentioned, this session comes after various other technical sessions we've hosted with the South African Institute of Tax, Cyber, FBI, and just showing the importance of this event and just in terms of, you know, exactly how can you get this process over the line and compliantly. So just a bit of the agenda today. There's a background and how it was announced. We're going to also look at criminal sanctions, supporting documents, practical step-by-step, examples of certificates, and then we would love a Q&A session at the end. Please keep your questions coming. Depending on some of the feedback that we get from you, our audience today, we might hold a second session on this if there's a need. Otherwise, the TreasuryONE team will be graciously sharing it on their YouTube channel and for the benefit of all their clients. By default, everyone's videos are off, mics muted. Any technical difficulties, please can you pop them in the chat section, and I do see the chat section is flowing very nicely. Good to see people joining from a warm and sunny Joburg, cold and wet East London, Pretoria, Cape Town, Pretoria, Centurion, Joburg. Nice to see that spread happening. There will be also a live poll at the end of the session. If you can please just submit your answers and we can unpack that toward the end. Roxana will unpack that with Joshua. And let's keep the webinar engaging, keep your questions coming. As I mentioned, we'll try and answer as many as possible towards the back end of the session. I do know that many of you on the call the first time are dealing with tax consulting. Maybe it's the first time you've heard of us. TreasuryONE, I know you're all dealing with already. We just always like to share the textbook. We're not here to sell it, but just the reason why I share it is just giving you context that we are tax technical at heart and very passionate about the deep technical side of tax legislation and tax law. And hopefully you'll see that coming through our presentation. And we always just show the quote of Judge Dennis Davis that talks about how the book remains an invaluable guide to a complex set of tax challenges. This book in particular is the South African first on expatriate tax. Although the content is a bit different today, if you do have a copy of the book, and a lot of our partners in our professional partner network will always tell me how they send photos or screenshots from the book about the practical unpackings of certain case law, which they often share with clients. And that just shows then the level of technicality that we go into, but at the same time, try and make it simple. And I think that's what Dylan and his team mentioned on the session that we did, was how we took something very complex and made it simple for the audience to understand. And I hope that that can come through today and that everybody on this call does get value from the session. Then our speaker, Joshua Beju, the Head of Strategic Engagement and Compliance. You're in very safe hands. Joshua has been doing multiple sessions on this topic He's an admitted attorney of the High Court. He holds an LLB and LLM degree, specializing in international tax and business law. And he has 5 years of legal experience in various aspects of South African international law. I know specifically he's had his hands dirty in this application process for the last couple of weeks and months. So he does know practically how to get that application over the line. And he'll just be sharing a little bit of background into SARS's strategic intent around the change. Before I hand over to him, just some general comments. I know the topic remains extremely important, and it's still featuring in the media over 2 months later. I'm not sure how many of you saw the report, News 24 and City Press releases on the topic. And that just shows you how industry-wide and globally the topic is having an impact, that it's still featured in the media 2 months later. Today's session provides a high-level overview of the new SARS approval of international transfer, the AIT process, which is the enhanced TCS process that consolidates the FIA and financial immigration into a single application. Again, sorry about the technical difficulty with the music in the beginning, but Jashwan will just talk a little bit more. But it's important to understand that government is following the money, and SARS is being clever in their approach to track down non-compliance with an effective self-audit following the money trail. And this is just part of what we're sharing as what we encounter as one of South Africa's largest tax 6 providers, and for the benefit of the wider market becoming smarter together. Thank you once again, TreasuryONE and your team, for this privilege to present today to your partners and your clients. And without further ado, I see Jashwan has popped up on the screen. I'm now going to hand over to Jashwan once he starts sharing to take us through the main part of the presentation today, and then also end us off with that Q&A. Sorry that I have to jump off later, everyone, but I'd love to see what the feedback was in the chat section afterwards. But Jashwan, without further ado, handing over to you.
Cool. Thanks, Dylan. All right. So as Dylan said, where we want to start this discussion is a bit of background on how it was announced. Now, historically, it's fairly evident that there were 2 processes, right? One of them was your FIA, right? So your foreign investment allowance, and the other was your formal financial immigration. Both of these processes permitted the movement of funds either with yourself or without yourself. And what SARS is doing at this stage is they have taken these 2 processes and streamlined them into a single process, being your approval international transfer. Now, what that means for the market is, yes, your single discretionary allowance is still there, it's still available. So that's 1 million per annum for a South African tax resident. Now, on the flip side of that, for someone who has ceased their tax residency or non-tax resident, that single discretionary allowance does not exist. So the approval international transfer is then needed for movement of any amount, under 1 million, over 1 million, under 10 million, over 10 million. Historically, the foreign investment allowance of 10 million was viable, and now it is the case of any amount in excess of 1 million, even less than 10 million, requires the approval international transfer. Now, this is not something that's completely come out of left field, because if we go back, if we look at the budget review from 2020, there was mention of the strengthening of tax treatment and more stringent verifications for amounts above 10 million for outbound transfer. Right, so that stage was still taking that foreign investment allowance into consideration. But what SARS has done now, and to align or to not align with their strategic intents, because on the one side, and for this particular topic, it's really 2 strategic intents of the 9 that are the most relevant. It is making voluntary compliance easy and sometimes seamless, and making non-compliance hard and costly. Now, if we think about the new VAT registration, the stringency requirements there, that's a case of you're actually making voluntary compliance hard and costly, because your fraud, your defrauding, your fraudulent VAT claims it doesn't really take place at registration. Usually it's at invoicing stage where there's fraudulent invoices or incorrect details or something to that effect. Now, that's SARS muddying the waters a little bit. Now, on this front, it really is a case of strengthening the tax treatment, yes, but it's really following a narrative, and that's why that intro song, it's quite relevant. It's following a narrative of following the money, because this AIT process is built on 3 pillars, and that is, where are you getting it from? The source. Now, as most of you know, for your large outbound, your inbound, etc., when you needed that SARB endorsement or approval, SARB would always ask for source. What's the source, guys? It's a loan. Give us a loan agreement, or can we please see bank statements for the last 6 months? Something to that effect. Now, what's happened here is, not only is it for all amounts in excess of R1 million per annum, but further to that, it is also a deeper dive into the source. So historically, if you said the source of funds is my employment income, and it's cash on hand, it's in my South African bank account, and I want to transfer it to an offshore investment, that's fine. That's your source. Right? Here's the bank statements. Listen, the 15 or 20 million has been sitting in my account for the last 2 years. There's a little bit of interest on it, but whatever. I have the funds. This is the source. This is where it comes from. Now, for the same scenario, it's a case of your bank statements, your salaried income slips. In the event where, using the 15 million example, 5 million is from salaried income, and let's say 5 million is from the disposal of a capital asset, and 5 million is from sale of shares. You then need to backtrack and provide the source documents for all of those disposals. And further to that, that's where we move into the second pillar. It's a statement of asset and liabilities, right? So typically for the last 3 years, but this is both at cost and at market value, which means immediately you see that the shares, as an example, okay, you disposed of it in 2022, right? You got 5 million for it. Great. That was the market value, right? You've now declared it at market value when you disposed of it. Okay. What was your take on cost? For a property, it's probably even worse, because what was your cost price? Okay, this is your base cost. Right, this is your market value upon disposal. Okay, what would be the CGT? Was it a primary residence? Did you correctly apply your primary residence rebate? Okay, it actually looks like you've short paid your capital gains. You're now non-compliant, and therefore your AIT may be rejected. So when it comes to pillars 1 and 2, what we like to do from a practice management perspective is conduct something called a reasonability test. And I'll get into that a bit later. But basically, that is what SARS requires, but more than what SARS requires, should they ask for more post-submission. And it ensures that your liquid and transferable funds are always equal to or more than your application value, to ensure that at the very least that is not the reason for it being declined. Prior to that, we obviously run a tax diagnostic that gauges your compliance with SARS. Once those 2 boxes are ticked, the only thing that's going to happen is they may request further information, but you won't be declined, because 1, you're compliant, and 2, any information they could request is on hand, and you've conducted a reasonability test, and it has concluded that the transferable amount is justified based on your liquidity at the time. And then lastly, we've obviously got, where are you putting the money for your SA residence? And I think that's fairly straightforward. It's very much details of just the process. Now, as I mentioned, budget review 2020, you'll see here that it's mentioned strengthening the tax treatment, more stringent verification processes, a risk management test. And I like to think that good practice management is when you can actually actively say you've beat SARS to the punch, you've got a risk management test, and it is on par, and if not more stringent than SARS's test, to ensure that at the very start, your clients are always well educated of the way forward, the prospects of success, and exactly what to expect from SARS. All right, so the new process came into play on the 24th of April this year. And, in a number of our publications and articles, etc. And if you guys want to hear more about this, obviously I'm on 7:02 tonight. I think it's like 9:10 or something like that. But it's really a case of there was not much fanfare, and SARS simply implemented with immediate effect. But something that's very noteworthy, actually, is the fact that the tax compliance option for tenders were removed. So the tax compliance for tender, it had some sort of temporary effect, and you had to renew it quite regularly. Now, with that being removed, it's obviously more stringent tax treatment, because you've only got two options. You've got good standing, which means full compliance, but no movement of funds outbound, and you've got approval international transfer. And we'll get to that later, because historically it was good standing, FIA, and any financial immigration. So it was a three-tiered system. Now it's just got your two options, really. So funny point on that is, with South Africa actually removing the tender option, maybe the guys down in Australia should consider implementing a tender option, especially with that new PwC debacle. But that's probably a little bit too sensitive, but controversial. But I mean, I don't know. I get a kick out of poker taking a shot at controversial and what comes across as very kind of in the gray operating. We like to do things by the book. Right. So you'll see here SARS media statement. Hardware for taxpayers unwilling to comply, and allow SARS to ensure that all required tax payable accounted for, and if required, address any non-compliance that's detected through verification and audit, aligning with our strategic objective. Now, one of our polls that we're going to have a little bit later is, does it actually align? I don't know. I feel like it's possible SARS actually missed the boat on this one, and what they've done is they've implemented a process that is directly contrary to making compliance easy and sometimes seamless, because now you've just made it a lot more painful. But it almost comes across as there's a bit of a backstory to this, because it could be a case of, is this process, or has this process been implemented so if there's additional wealth that is disclosed, or if there's any sort of inconsistency, it gives SARS that window to actually then look into, especially high net worth taxpayers, to look into their wealth and how it was accrued, the sources, where it's stocked away. Because even that asset disclosure, it's your assets and liabilities at cost and market value, both local and foreign. And that's your properties, your listed, unlisted investments, your crypto assets, your bank accounts offshore. It's the whole bang toot that needs to be fully disclosed to SARS. Right? As we said, AIT, it was previously known as Foreign Investment Allowance and or Immigration, so the FE. So you can see now you've got your good standing option and you've got your approval international transfer. And that's it. Existing historic applications for tender, FIA, immigration, etc., still visible. And we've obviously seen that on our side as well. But yeah, that's something we'll get into shortly. The e-filing, it's really more the practicalities behind it. I do not think anyone on this call is very interested in how to go into e-filing and what buttons to press, but it's more about just ensuring that that burden of proof is fully discharged for the transferability of the liquid amounts or assets, as it may be. Now, very important point, and this is not to scare anyone, but the criminal sanctions behind it become very real very quickly, and this is very important not just for that very wealthy bloke that's trying to transfer R1 billion offshore, but also for the advisor that's assisting, and that is your accountants, your tax advisors, your attorneys, your wealth managers, your financial planners, financial advisors, etc. Because the criminality of these disclosures comes in with any sort of falsification of information. And that's for both the advisor and the taxpayer, the client, whatever you call them in your practice. And this comes in at a place of, evasion of tax, obtaining undue refunds by fraud or theft. Now, this speaks to the falsification of documents. And sometimes discharging the burden of proof is as much a case of documentary hard evidence as it is a case of being inside the mind of that SARS official that's processing these requests. So, we like to say, eat dessert first. And what that means is when you're doing that not diagnostic, and when that reasonability test is being run, that is when all your documents must be gathered, put into a nice folder. You submit what's needed for the application to justify the transfer, to justify the computation, etc. But you've got all your ducks in a row at the very start. Now, going into the mind of that SARS official is simply a case of, if that guy requests 5 documents, let's say it's a distribution from a trust, and the guy at SARS says, you know what, you're missing the trust deed, the original trust deed, and I need the trust's bank statements for the last 3 months. I need the beneficiary's bank statements for the last 3 months. And in your initial application, you submit all of that. And then he says, well, actually, what we need is another 3 months worth of bank statements, and please send us the AFs for the trust, right? So you didn't submit it initially, and you submitted 2022 as an example. 2023 is still in draft form, but be that as it may. Now, in the perfect world, you've got all of that on hand, even the draft document, and either you can submit the draft and inform the guys, listen, still to be signed off and audited. Alternatively, you can ask the trustees very quickly, listen, this is what needs to be done. Draft needs to be finalized, signed off. We need to submit in 24 hours, 48 hours, right? But when you have that delay, and the party on the receiving end, so the guy at SARS, or even in your practices, where you've asked for information, there's a lengthy delay. I know for me personally, when a client takes too long to send me a loan agreement, my immediate thought is, did this loan agreement exist when I asked for it? Or was it just prepared 2 days after that and it still needs to go through the signature process? I'll only get it next week. And I think that's more human nature. So we always need to be well aware of this. And this is why, from a practice management perspective, we like to say, eat dessert first. It's obviously not the only correct approach, but we find that it works quite well. It builds a good rapport with SARS, where it's not a case of numerous follow-ups and extensive delays, because that also backlogs your guy at SARS. And now finalizing the maths, that's increasing his workload. It's backing up his workflow. So he's not in the happiest of spaces. He's a bit annoyed at you. Your client's a bit annoyed at you for asking so late in the process. And all around, everyone just gets very frustrated. All right, and then obviously that criminality charge, or that criminality risk, if there's any sort of falsification, is very real. And that can be either a prison sentence, or it can be just a fine. All right, so if we just go back very quickly, we'll see that any individual guilty of an offense and upon conviction is subject to a fine or imprisonment for a period not exceeding 5 years. All right. So if we look at the TCS minimum requirements, right, per the SARS announcement, I'm just gonna drink of choice for all webinars. When you apply for your tax compliance status, right, in respect of the AIT, for individuals, required to submit the following documents. Now, one point to just note here is AIT must be applied for by an individual. So in the case of a South African trust making a distribution to an individual that now lives in the Netherlands and has ceased their tax residency 3 years ago, in order for that individual in the Netherlands to make the application to receive the distribution, monster-sized list of supporting documents, but also they would then need to register with SARS for a tax number The registration for a tax number does not immediately make you tax resident for tax purposes, just clearing that up. However, you do need that tax number to make the AIT application because it is made on e-filing, so you must be registered on e-filing as a recipient. Now, from a requirement perspective, you've got your specific documents demonstrating the source of capital to be invested, statements of asset and liabilities as mentioned previously. If a taxpayer is a resident in SA, then they're required to indicate the country where the investments to be made. Right, so that's your three pillars. It's your source, assets, liabilities, and purpose. And so that's fairly standard. That's a very nice picture my design team put together. That was something on the second or third slide. Now, taking that further, if they're non-resident, they need to submit proof of session of residency, right, including the date, which should be on the session, and details of any locally listed or unlisted securities or interests that will be transferred to an exchange outside the borders of South Africa. Right, and then if submitted on their behalf, so if an asset manager, wealth manager, tax attorney, etc., is making the submission, then a power of attorney is required to be signed by the taxpayer. All right, now the supporting documents, not going to go through each and every item, but just because obviously two items that I have mentioned is where you've got savings or cash in hand. All right, so you'll see that bank statements issued on the date of the TCS application. So if I make it today, I need to submit with it a bank statement dated 27 June. And I would say, as a matter of prudence, where it's a fairly large amount, get that proper bank confirmation, get a little bank stamp, maybe a letter, etc., just to confirm that. So that's just more from perspective of prudence and risk mitigation. Now, going a little bit further, supporting documents that demonstrate or prove where the cash savings originated from. All right, so this is, as I said, if 5 million is from salaried income, 5 million is from the disposal of a property, and 5 million is from the disposal of shares, you need to then backtrack to all of the originating values, paperwork, paper trails. And should the taxpayer claim the source is annual income salary, administrator must review the past 3 years of taxable income to ascertain the reasonableness. So if you're saying 5 million from salary income, but according to SARS's records, you've only been declaring, let's say, conservatively, R1 million a year, the question will arise. Okay, 3-4 years ago, you didn't have 2 million, and then it accounts, correctly, but also pre-tax, post-tax amounts, it's not adding up, and that is why the reasonability test is very important. And then, I did touch on distributions from a trust, and this is where, one of the aspects where it can get quite hairy. You need a copy of the trust deed. You need the actual trustee resolution that supports that distribution, the details on the source. So not just the fact that, hey, it's held in the trust, but okay, how did it get to the trust? Where did it originate from? So almost like the originating cause in law, this is the originating source. All right, bank statements of the taxpayer, that's the recipient, reflecting the distribution, and bank statements of the trust reflecting the distribution. And that must tie in within a month. All right, and then the trust latest share portfolio as well. That one's fairly new. And the latest trust financials, I don't think that one is too far off. All right, then we've got your donations. Just remember that the taxes paid on donations not applicable for donations between spouses. So the proof of donations tax paid is not required if between spouses. Any other donation proof is required. You've got your inheritance where you need a final L&D account. Now, with inheritance, that is sometimes problematic because if there's a compliance issue with SARS on the estate itself, then the L&D account typically will not be finalized and signed off by the master until that compliance is resolved, which means your inheritance cannot then be sorted out because you don't have a final L&D account. So it's really a catch-22. But anyway, then you've got your categories of loans, fairly straightforward, very similar to the SARB cross-border side of it, where you need the loan agreement, you need a couple of bank statements. But again, they're going deeper in looking at the source of the capital, so the source of the loan funds, and then also looking at the financials for trusts, companies, etc. And then you've got your sale of properties. This is where I said, it could be a case of ensuring the correct amount of CGT is paid. Either yes, either no, and it may open that window for SARS to do a bit of a deep dive. Similarly with sales of shares, securities, crypto assets, very tricky, unless you are so well versed in reading those CSVs and using the full turnkey option for the APIs. You are going to have a bit of an issue with the crypto assets, because it's not all black and white. It's not a case of every crypto investment is an asset or every crypto investment is revenue in nature. It's a classification. There's an entire test that goes through it. And usually the very, very baseline is, have you held the asset or have you held the crypto item, which is now a financial product, but have you held this, a financial instrument? Have you held it for more than 3 years with no movement, no trading activity on platform or off platform, unrealized, not just for fiat currency, but also for any other virtual currency, no change, etc. Then we can say 3 years, absolutely stagnant, no movement, no transaction, looks like an asset. Alternatively, you've traded 5 times in the last year, it looks more like revenue. Okay, so a little bit complex there, but again, something that is navigable. And then we've obviously got your earnings, your royalty incomes, and your investment, right? And then we have other. Other is basically anything else, and all it says documentary proof and explanation, but what it boils down to is integrating each and every of the listed items and seeing how you can best categorize that other transaction, and from there gauge what's needed to support it. But again, this is where the reasonability test and the tax diagnostic is essential. Right, so fairly straightforward. Compliance profile must always be green. I think we're sitting on something like 19,500 taxpayers on our practitioner profile. Still managed to keep that green, and that's obviously because we use tools that are needed. I think one item that we find quite helpful in our practice, at least, is a little tool called Tax Check. What it does is it runs a compliance check on your entire practitioner profile, the whole database, and it flags for you which of your clients or taxpayers are non-compliant and how they are non-compliant, what the remedial steps are, is obviously up to you, but it actually makes life a whole lot easier. So basically 19,500 taxpayers, I mean, hell, it would probably take 10 administrators 3 months to run through that entire thing. And I think it took Tax Check about 3 days to run through our entire profile, pick up any non-compliance for clients, and we quickly remedied that, and we're now fully green. And then you've got your compliance aspects. Now, as I said, previously applied for requests are still listed. So your foreign investment, your immigration, and your AITs there. And then you've got your new section, which we'll get to in a bit. But this is your tax compliance status request. Very straightforward. You'll see that your selection is approval international transfer, and it is asking you for everything from your source, all of your details, the destination, so where the money is going to land, and there is also the case of apportioning it. So as an example, once you've declared your residency and all of that, and you've said, listen, the total value is 15 million, right? You can then add on little container rows to declare that 5 million is from here, 5 million is from here, and 5 million is from here. And then you've got to declare your beneficiary status and any existing loans and trusts. As we saw already, you've got to say source, and then you've got to upload all those supporting documents to support your asset and liability disclosure. But that is subsequent. You choose your source. You then complete the asset and liability form. Now, you'll see here, this speaks to South Africa, assets, liabilities, local assets at cost, at cost, right? As we said, then foreign again at cost and at cost. And the problem that comes in here is quite often if an asset was acquired a number of years ago, I mean, from a legality perspective, documentary evidence is only legally required to be retained for a period of 5 years, post-event, post-transaction, post-acquisition, etc. And it really is the case of, okay, SARS, you're asking me to give you something from 15 years ago. And we had that 2 weeks ago where we had to go back 15 years. Granted, it was a very complex transfer where there were multiple sources. I think we ended up with about 12 sources, which comprised an amount, and it was a transfer of 74,700,000, some odd number. And off the back of that tax compliance check, there was an outstanding return, there was a small admin penalty due, submission, quick payment, okay, all compliant, reasonability test. Actually, you know what? You're going for an odd number, and if you plan to fully financially immigrate, you're going to need to cater for a bit of exit tax. So let's drop the application amount to around 70. That's safe, that's comfortable, and you're going to get that through because your liquidity says 74, you're saying 70. So that's all good. And then we've got what happens post-submission. So you have on the one side, SARS says, listen, we've got your AIT request. You please need to provide us with some additional supporting documents. Right? This is why, on our side at least, we eat dessert first. So when we get this notice, we've already got those documents on hand and we can respond immediately. All right. And then you'll see that your supporting documents are actually listed on the SARS website. And where there is some uncertainty, you can always either reach out to SARS and maybe you'll get a response 3 to 6 business months from now. Or alternatively, you can always reach out to the guys at TreasuryONE, or you can reach out to us directly or through Dylan, whatever's most convenient, and we can obviously assist with the documentary list and the application process, the SARB, and just make it easier, reduce that administrative burden. And we've got your examples of certificates. So yes, the process is all good and well. And yes, it may be administratively painful. And you don't want to do it because it's that painful. But the outcome looks like this. So this is where your PIN is issued, right? Your approval for international transfer, and it's been successful, right? Then you've got the case of a decline. Now, this particular decline was for the approval international transfer. Now, quite often a question I get is, how long does it take? So we just go back to the previous slide, right, very quickly. You'll see that this is dated the 4th of May, right? But the process only kicked in on the 24th of April, which means it took SARS roughly 2 weeks to get this processed and through. So where your ducks are in a row from the start and you ensure to fully discharge that documentary burden, SARS do actually have some degree of efficiency in processing these applications. All right, now from a road mapping perspective, as I said, there's the free initial advisory consultation. That's all good and well, it's exploratory, and it gives you an idea of what you're working with. Essential is the tax diagnostic and reasonability test, especially where you're working in the realm of 10, 15, 20 million upwards. That reasonability test is essential. And it also mitigates the risk of rejection, because we have seen rejections for administrative penalties of 2,500 and owed. We've seen rejections for an outstanding tax return for 2021, where it really was a case of it was just a null return needed. There was no liability to arise from it, but it's just because residency was never ceased. So it's really just a compliance game with SARS. Right, and then lastly is obviously your application for the AIT PIN itself. All right, and I see we've got the first poll running. So, do you believe the enhanced AIT process has been implemented with the intent of auditing wealthy taxpayers to uncover potential non-compliance? And I don't know, myself personally, I am inclined towards yes, because where there's not any non-compliance, it allows SARS to further investigate the full extent of the taxpayer's wealth. And then, what is your view on the AIT process considering supporting documentary requirements by SARS? Now, I would assume the vast majority of our audience is very, very well versed with these outbound fund transfers, whether it is under new process, under the old very standard SARP process. But what is your view here? Can taxpayers handle the process on their own without the assistance of a tax prac, an advisor, a financial planner? Or is this assistance preferable, not mandatory? Alternatively, given the level of detail and the risk of criminal sanctions, would it be considered essential that a professional assist with this? So I see the poll is open. We're just going to give it a few minutes. Ideally, we'd like to get to about 50%, and then we can stop the poll. All right, so I think we can stop that one. We're about 40. Okay, well, it's still going. We're almost at 50. But the results are very clearly skewed in the direction of yes, where there is non-compliance, it will allow SARS to further investigate the full extent of taxpayers' wealth. Now, it may just be me, but I mean, that almost sounds like an opening for a lifestyle audit. And we've seen SARS historically very much in the shadows, at least from about 2007, performing these lifestyle audits and becoming more vocal, more open about it from about 2020, 2021. And then, as you guys will remember, there was that introduction of the high net worth individual unit headed up by Natasha. Very nice individual to deal with, but also very much by the book. And in the last chat I had with her, it was really a case of she outright said, SARS knows everything but what you had for breakfast. I think I've actually quoted that in a piece or two. It was on a collaborative webinar a while back. So results are very much what was expected, and it's what we've seen in every single one of these sessions. And then on the second point, on the supporting documents, I see the results are actually, again, skewed towards exactly what's expected and roughly the same numbers as what we've seen in the prior training sessions to the market, which is that given the level of detail and risk of criminal sanctions, the assistance of a financial professional, tax prac or wealth planner, asset manager, etc., is essential in this process. Right. Now I think it's time to open up the floor and bring in Roxana to run us through a few questions.
Waiting for a few people to submit some questions on here. Maybe we give them a few minutes. Guys, please feel free to pop all your questions on here. Yeah. There's no silly questions. Jashwin's here to answer any of those questions that you might have on the topics that he's discussed here today. I see that Shemaine also asked, can we get a copy of the list from you? And that was regarding the list of supporting documents, Jashwin.
Yeah, so with regards to the list, let's just check with the team, Dylan and them. I think the presentation may be available off the back of the session, just to those who have attended, Alternatively, Charmaine, you are more than welcome to actually just pop me a mail or pop Dylan a mail, and he'll be in touch with me to get that list done.
While we do wait for further questions, I see there was also a comment, are you covering financial immigration for individuals here? Dylan did advise that not on this session, but there is a session that we will be holding soon. You guys can just click on that link and please feel free to register for that event to learn more about the financial immigration process. We have a question from Srini. What is the cost of moving 10 million Rand offshore?
So it's very dependent in terms of how you're doing it. And you also need to consider, do you need to run through the full process, or is it a case of it's a clean 10 million, it's a single source, it doesn't need a verification, it doesn't need to go through a reasonability test. Srini, if you can comfortably say, this guy's fully compliant, it doesn't need a tax diagnostic, then all you would need is that approval international transfer application itself. And the cost there is very much dependent on the source of funds and what process it's going, whether it's going to go just the movement of funds or whether it's part of the financial immigration process and it's going to be simultaneous.
I think this is something your team can potentially quote on, maybe, Srini, if you get a hold of us at the back of this call, Josh can maybe have a call with you and discuss what that potential costing can look like. Dylan asks, are there further legal implications in the new process compared to how it was previously?
Dylan's always got a lot of questions for me. He tends to WhatsApp me quite frequently on some of the most interesting stuff. So Dylan, yes, there are potential legal implications in terms of the criminal sanctions, but further to that, the procedural implication is that it's a more time-consuming process. The AIT application is more time-consuming, and you need to apply for an AIT per transaction. So it's not necessarily per source for a single movement, but it's per movement, even if each movement is from the same source.
I see Mark Spiro has a question. I'm dealing with non-residents exiting from retirement and pension products. Is AIT required when funds source is a regulated source?
Yes, AIT is required for each and every movement of funds outside of South Africa for non-residents, because non-residents not qualify for the single discretionary allowance. Now, whether the source is regulated or unregulated, and this kind of touches back on listed or unlisted shares as an example, right? So it's not the regulation of the source, but it's very simply a case of, if you're dealing with non-residents exiting from retirement and pension products, you've got to look at, firstly, the terms of the product itself, and you've got to secondly look at the distribution. So if it is a South African-based pension fund and all contributions were made while the individuals were in SA, they subsequently ceased residency, and let's say they buggered off to, where do people like to retire? Italy, Greece, somewhere there, right? What needs to then happen is they would need an AIT application. And that is because technically the funds are still situate in South Africa and the source of the transfer will still be South Africa. And unless it is obviously a global endowment put in an offshore wrapper, that's a different discussion, Mark. But for your standard stuff, you're going to need the AIT for a non-resident to transfer any amount. And that is definitely something that we can discuss offline. I see you said dealing with non-residents, so I'd assume it's a number of these guys that we're dealing with, so we can probably discuss, and then I will assign you a team that can assist you with that.
I see I have a question here from Dylan. When completing the AIT form, is it correct in saying that the form is completed according to the ANL at the time of submission, which means current, with supporting documentation for the last 3 years at cost?
So, yes, but also it is supporting documents for the last 3 years at cost and market value, and then taking it a little bit further when completing the form. It's aside from the ANL, remember there must be full disclosure on all source items as well as destination items.
Thanks, Joshua. I think we'll just wait for a few more questions to come in. I see we've got a large number of attendees on here. There's 93 in total, so I'm sure there must be a lot of questions. Let's just give it a minute. While we wait, Joshua, in practice, what are the frequently asked questions or misconceptions that you've come across in the AIT process?
Yeah, so one frequently asked question is, does the foreign investment allowance still apply? I mean, I got one last week actually that came through the financial immigration team, Rock. So they came through your team, but it was a case of the guy said, yeah, well, we're going to use the FIA for the first 10 million and we'll AIT for the other 9 million. Well, actually, that doesn't work anymore, man. So that's the first one. And then in terms of common issues or commonly asked questions that we've had, there is the case of, okay, FIA, financial immigration, it's now one process. What's the difference? It's obviously the intention. And yeah, I think those are the most common we've received from a perspective of problems. Most common problems we've seen is where individuals have not formally ceased residency, but what they've done is they've immigrated, but not financially immigrated, and they've kind of let their South African tax affairs fall by the wayside, and it's usually nothing major. It's just a case of, okay, there's a 500 Rand admin penalty here, or there's an outstanding tax return here, whatever the case is. And those are some of the common compliance issues we see. And that's why we've, on our side, we've implemented that tax diagnostic as a step one. So before we get too deep into the process, before, clients incur the cost of running this whole process just for it to fail, we'd rather gauge that success rate.
Nathan asks, when transferring inheritance offshore, how do you overcome the catch-22 mentioned where master requires AIT, but AIT requires final L&D account?
So, Nathan, on that one, it's the master doesn't require AIT. The master requires the good standing. So that is the tax compliance. Master doesn't require AIT, and then AIT requires the final L&D. But then AIT and good standing are quite roughly similar in terms of what boxes need to be green to acquire that TCS, a specific TCS type. So that is your catch-22. So if you want to avoid it, it's really a case of, and it always has been a case of, first prize is always complete compliance.
Thanks, Joshua. Paul asks, for the AIT above 10 million, is additional SARB approval required?
So yes, and that is more in line with depending on the source. So as an example, if it is a loan, then yes, it's still going to have to go through the SARB process as normal. If it is cash sourced, as in your cash on hand, salaried income, and there's no muddied waters in terms of apportionment, then it may be possible to simply get a SARB endorsement, so more like a rubber stamp. But where the originating source is not the individual requesting the transfer themselves, then your SARB approval is required in most instances, especially if you are transferring to offshore exchanges. If you're transferring things like listed equities or the listed shares, certain crypto assets specifically, then you would still need that SARB.
Thanks, Joshua. I see we don't have any further questions on here. And I see we're also coming to the end of our session. We've got about 2 minutes left. Since we don't have any questions at the moment, what I would suggest is if anybody does have any questions, please, after the session, feel free to reach out to Joshua directly. His contact details will be provided. Alternatively, you are welcome to reach out directly to Dylan and his team at TreasuryONE, and they would be able to facilitate introductions or assist on their side as well. I think just to end things off, I'd like to say a huge thank you to everybody for joining today's webinar, and thank you very much for being so interactive. We really do appreciate it, and I'd leave the final thank yous to Joshua.
Cool. Thank you so much to everyone for attending, and thank you so much to the team at TreasuryONE for literally doing all of the facilitation, from the setup to arranging this to finalizing dates. It's been amazing working with the team at TreasuryONE, and obviously, you know, with the team that's so on the ball, so efficient, we would only assume that all of TreasuryONE's clients and all of their partners are at that same level. So really looking forward to working with you guys.